All right, what's up? So in this video, I want to do a live video in response to a video I posted earlier a couple days ago. I left the gym, bedhead, hoodie. The guy at the front desk was a 25-year-old young man. And he's like, yo, what do you do for work, dude? He's like, I looked you up on Instagram and you're driving a G-Wagon. And I'm like, what's up? So I sat down with him. I'm going to share with you some of the things I shared with him on that video. It's a great video, by the way, to go watch if you're looking to kind of build, wealth or build freedom in your life, financial freedom in your life. You're looking for some strategy. That's a great video for some of the mindset stuff. But I've had a ton of people reach out to me. A bunch of you that are younger, like 21, 25, 23. The young man at the gym was 25, and they've reached out and said, like, hey, if you were 21 again, if you were 23 again, if you were 25 again, what would you invest in? Where should I put my money? What should I do? Now, here's what I want to share with you. It's a tough question for me to answer because your situation is unique. Everyone's situation is unique. How much cash you have to invest is unique. Your knowledge base, all of that stuff is different. So here's what I want to share with you. I'm not a wealth manager or like an investment advisor. I don't have any certifications for that. That's not what I do. I'm an entrepreneur. I run a multi-$100 million business. Our business is, I teach people how to make money online, specifically make money from their phone. I believe that like entrepreneurs and small business owners are the heartbeat of the economy, and I create small entrepreneurs, like micro entrepreneurs, virtual entrepreneurs. So that's what I do. So I'm not going to give you a bunch of like, you should specifically invest in this or this. That's not where my skill sets lie. I want to give you the ways to think about it. And here's what I'll share with you. George Bernard Shaw said that 2% of people think, 3% of people think they think, and 95% of people would rather die than think. The point is this: most people don't even think. They just kind of are. They're numb to reality. They're numb to thinking. You need to be a thinker, my friend. Okay? You need if you're going to become financially independent or wealthy, you got to start thinking about this stuff. So I'm going to give you some frameworks and some ways to think about it. So with that said, let me start by covering this as a recap. The video I did the other day is money. You can go back and watch it. But let me recap what I covered so that it will give us a foundation to talk about what you should start thinking about when it comes to your investing, your financial future. I also want to say this: I have no college education. I came from a direct sales background, meaning I worked both door to door and at a mall kiosk in my early 20s selling animated Bible DVDs, animated Bible videos. And I was a dude at the mall you try to like not make eye contact with. You're like, dude, he's going to suck me into his mall kiosk. And then at age 25, I became an entrepreneur. I've had the ups and downs. First business failed, the whole thing. But I've gone on to build 4 different multi-million-dollar businesses. I've gone on to generate over $2 billion in sales and help people. Literally, I've spoken in 20 plus countries around the world, help people around the world to succeed. And I'm passionate about this subject because it's a subject that I live in. Here's what I'll share with you. This isn't theory. Like, I may not be like an investment advisor, but guess what I am? I'm someone that's actually gone out there and done it. So sometimes you want to be careful where you're getting your advice from, particularly when you're young and you're like coming up. Like the dude that's more broke than you is giving you all the advice. Like, no, I don't know if you want to take advice from them. I'm someone that's actually in the marketplace, in the field, making it happen, building a business, helping people like myself. That's how I feed my own family. All right. So we talked about what poor people do is they have an income, pay their expenses, so basically make money, pay bills. I remember when I first read this, I was like, that's what I do. Then what rich people do is they have an income, the income builds assets. And in this definition, this was from Rich Dad Poor Dad, this definition is an asset, something that generates cash for you. In other words, it pays you each month without you exchanging time or effort. So for those of you that are in sales, you say, well, my team is an asset, right? I have an asset with my team. If you throw your cell phone and laptop in the ocean for the next 6 months, you're not going to continue to receive that override on that team because the company is going to get rid of you and put someone else in there. So an asset is something that generates cash for you each month. And then the goal is for the assets to be able to pay the expenses. So this is the goal right here, is asset creation and creating cash flowing assets. That's your goal. Now, how do you do that? I covered this on the video, so I'm going to go quick through this part. But number one is you maximize your income earning potential, you minimize your expenses, and you build assets. So here's the words I want you to focus on. First advice I have for you. You're 21 years old right now, you're 23, you're 25, and you're saying, hey, how do I become financially independent, or how do I build wealth in my life? Number one thing, my friend, number one, is you need to make more money. You need to maximize your income earning potential. Get better at your job. Learn how to sell. Get a sales job. Like the kid I talked to at the gym, he's leaving the gym to go sell cars. Good for him. Smart. because the income earning potential of selling cars is way higher than it is working the front desk at the gym. Nothing wrong with working the front desk at the gym, but you want to maximize your income earning potential. How much can I earn? It's one of the reasons I love what I do. I get to help people that they still get to keep their income, but then I get to help them to maximize their income earning potential by learning how to make money from their phone, learn how to make money from social media. So instead of just being on social media, they're monetizing it. So you want to maximize it. You need your income to go up. Number 2 is you want to minimize. So I want you to think about maximize, minimize. Minimize your expenses. This is the second. You want your expenses to go down. We're going to create a gap between income and expenses. Here's the second best piece of advice I'd tell you if you were 21, 23, 25. And that is, we need to get rid of your personal debt. So if you have credit card debt, we gotta go after that. The car payment, we gotta go after the car payment. Meaning, let's go pay that thing off. Let's maximize your income earning potential, and then take some of that money before you get into investing, into building assets. We want to invest into just getting you to where you're paying off cars, paying off credit cards. You're not buying. We talked about it. You're not buying a bunch of Jordan shoes right now. You don't need all that stuff right now, because that money is going to help us to create a gap of income and expenses where we can start building assets. So right now, if you have consumer debt, that's what we need to go pay off. You guys with me? That's the focus. Make more money, take the money you're making now, learn how to make more, and then pay off your debts. No personal debt. Third thing from there is then we'll build. So it's a maximize, minimize, build. We'll build assets from there. All right, that's the first concept I want to share with you. Now here's the next part. Let's go over rule of Warren Buffett. Warren Buffett is the greatest investor in history. Warren Buffett has 3 rules to investing. This is going to sound funny, but I want to walk you through his 3 rules because he's the greatest ever. This is the man. Rule number 1 is never lose money. It's hard to earn a dollar. You go out there and it's hard-earned dollars, right? You earn your dollar. After tax, after tithing, after expenses dollar. So it's like you washed it from, you paid your taxes, you paid your tithings, you paid your expenses, you've lived your life a little bit, and you still have a dollar. Like you've washed it through all that and you still have a dollar. Don't want to lose those, dude. That's rule number 1. Don't lose money. I'll share with you some ways to not do this in a second. Rule number 2, never lose money. And rule number 3 is follow rules 1 and 2. Here's the point I want to start with. You're 21 years old, you're 23 years old, don't freaking lose money. Don't lose money. Like if you're going to invest, don't lose money. That will lead you to this next piece of advice. So we're going to go from Warren Buffett rules to my rules. And obviously you want to listen more to Warren than me, but the JKP rules would be this. Number 1, never invest more, so never invest more money than you're willing to lose. Don't invest more than you're willing to lose. When you invest, even if you've done all your homework and even if you know your goal is to not lose money, you still run the risk of losing money. It's an investment. It's part of being a big boy, big girl, is can lose your dollar, okay? Don't ever invest more than you're willing to lose. I'm not trying to say you have to be so conservative one way or the other. I'm just saying you got to have that own gut check in yourself that I don't want to invest more than I'm willing to lose. That's number 1. Number 2 is invest in what you understand. Here's the litmus test. If you can't explain it in 1 or 2 sentences, you should invest in it. If you can't repeat it back in 1 or 2 sentences, you shouldn't invest in it. You say, well, my friend, he said it's a really good thing, or like I saw this guy on YouTube and he freaking thought it was smart. Listen, if you can't explain it back to me or to someone else in a logical, makes sense way in 1 or 2 sentences, you shouldn't do it. You with me? Don't invest in crap you don't understand. Don't just because everyone's hyped up or excited about it. If you don't get it, if you can't explain it, if you haven't taken the time to understand it, don't invest in it. Here's the reason why. If you make money, if you invest in something you don't understand and you win, you make money from it, okay? You're still an idiot because you didn't know why. You can't repeat it. You don't know why you made money. If you invest in things you don't understand and you lose money, you're even a bigger idiot. Do you want to know why? Because you never learned a lesson. You didn't say, here's the mistakes I made. Let's go to a post-mortem. Let's look at what happened. Yeah, I shouldn't have done this. I shouldn't have done that. This is where the market turned. I should have seen that coming. So you can learn. You can learn as an investor. So don't invest in this random crap that you don't understand because you're not going to learn on the way up or the way down. You want to be learning right now, particularly when you're young. Be learning some skills and learning how to pick good ones. Okay? Number 3 is invest in what you're interested in. These 2 kind of tie together because if you invest in what you're interested in, you'll want to study it. you'll want to read about it. If you love real estate, then dude, go study real estate. Go to some seminars, buy some books, watch some YouTubes, get around smart, sharp real estate professionals. If you love crypto, go get neck deep into it. Like learn it, podcast. By the way, listen to the ones against it and the ones for it. Like listen to the ones that say this is the stupidest thing ever. And listen to the ones that say it's the greatest thing ever. Listen to both. Like learn to think a little bit. If you love oil and gas, learn it. Just learn how the economy affects it and the recessions affect it, the ups and the downs and the pricing. Learn it. Like learn your game. Does that make sense? Invest in things that you're actually interested in, because then it's easy to learn. It's easy to learn stuff. Okay, let's go to the next one. By the way, you guys get some value? Is this helpful? Put the word value in the comments. Make sure you guys share this also to your threads, to your chats, to your teams. If this is helping you, serving you, giving you some good ways to think about it, make sure you share this out. All right, make it automatic. This is really important. First thing I want you to know is you want to pay yourself first. So here's how I want you to think about it. Pay yourself first means this. When you make $1, a lot of us, when we look at our bank account and there's $1 in the bank account, we think we have $1. Right? Dude, I just earned $1. Boom, I got $1. No. If you go pay Nike, or you go pay your rent, or you go buy food, the grocery store has some of your $1, Nike has some of your $1. That's what I'm saying. You don't need all the Jordans right now. Your rent has your $1, DirecTV has your $1, AT&T has some of your $1. They start pulling from that $1. That $1 is not yours. It went to everybody else. You took that $1 and gave it to someone else. So what you want to do is the very first person you want to pay, the very first person you want to pay from the $1 you earn is you. Take a portion of that and pay you. Like very first person. Before you pay the government, before you pay Nike, before you pay the grocery store, you pay yourself a portion of it. You say, well, how much should I pay? You can set that. The more you can pay yourself, the better, right? You live on less. So you pay yourself a portion of it. Pay yourself first so you have something left over with $1. Most people, if there's $1 in the bank account, they spend $1, $1's gone. It's zapped, it's gone. So you'll never see these years stack up. You say, well, I'm getting better at my sales job, or I'm getting better. Well, you're not stacking up wins together. The second thing I would encourage you to do is to build a team. Build a team means this, my friends. Even when I was young, 21, 22, 23, I started to build a team of, I had an accountant. I didn't have an attorney in those early stages. I have an attorney now. I have my own team now. And I know that might feel a little intimidating when you're 21, 22 years old, but you don't have to be an expert in every single area of every single thing. Like you can go build a team, go build an accountant that can help you, because your biggest expense you'll have in your whole life is tax. Your biggest expense is tax. And so you want to start to build a team of people that you can, by the way, in your investment, get around sharp people. Surround yourself with sharp people that don't really need your money right now. Like the one that needs it, that's thirsty for your money, that's not the one you want to surround yourself with right now. The one that's like, I don't need it, but I can show you what I did and what I do, that's a person that you start networking with and getting around. Third one is automate. So check this out. Here's what you want to do. So you earn $1. We talked about it earlier. You pay yourself. And then you want to do this. For example, you pay yourself, maybe you pay some savings. Like this is like your like rainy day, like all heck breaks loose fund. Maybe you have 6 months of savings. You build up that account. You pay your investing. This is money that you can actually go invest. So it's not money that you paid yourself. It's not money that you're saving for like the worst case scenario. It's like, dude, I got some left over to start investing. And then obviously you got to pay your taxes. You got to save for taxes. Particularly those of you that are like, you're in either direct sales or door-to-door sales or network marketing or anything that's like a 1099 type situation where they're not withholding, like a W-2 where they're withholding your taxes. You got to have discipline, my friends. The government reaches in there and grabs that, and the worst bidder in the world is the government. So you got to make sure you're saving for taxes. Then you have obviously all of your expenses and everything else. But then at the end of the day, you have some stuff left over. Now, when I say automate, what I mean is this. You can set up, you can do it through a bank too. But what I did is through a TD Ameritrade, you can set this stuff up. You can do it through index funds. And so instead of just having a ton of money in the bank, like just where you're earning 0.000000001% interest, you'd have it in a TD Ameritrade account, you're earning 4 or 5% interest as you're building your cash flow, your cash base, building some cash base so that you're prepared. I want you to know this: the more money you have on hand, the more opportunities will find you. You don't have to stress out like, dude, what do I do? What do I do? They'll find you, dude. build up that cash base, maximize your income, minimize your expenses like we talked about, and then build this cash base right now, right? So when you automate it, what happens is it automatically will go into this account. It will automatically take a portion. You can either designate a percentage or a cash amount. If you make $1, you take 10 cents here, 10 cents there. A portion goes into these different accounts. Because here's what happens. Let's just say for the sake of an example, you have 70 cents left over. And again, I'm using 70 cents as an example. If you earned $1, but now you have 70 cents left over, guess what you'll spend? The 70 cents. If you had $1, guess what most people will spend? The full $1. The point I'm saying is you don't want to rely on your discipline. It's what I call avoid versus resist. Avoid is the money's already gone, goes into all the spots that you did when you were like in your right mind. So you're preparing yourself to invest. Versus you just, boom, you get it, you spend it, get it, you spend it, get it, you spend it. So now you can live on what's left over. Are you following that logic? Are you following that concept? This automate is, man, it's so powerful because most people, we don't have enough discipline. If we look at there and we see a full $1, dude, I could buy the car, I could buy the Jordans, I can freaking go travel here. And we don't realize, no, you don't have that much in there because we got to spend some, we got to put some in the spots that prepare us to invest. Okay, it's a lot of information. Let me share this. I want to encourage you to start thinking about this stuff. So you're looking to build assets. Right now, you're maximizing your income earning potential. You're minimizing your expenses. Pay off that car. That car payment's $400 a month. Once we have that thing paid off, that's $400 a month that basically you're earning. Why? Because you're not spending it, dude. It's the Franklin thing. It's like penny saves, penny earned. Like if you're not spending $400, you got $4 more hundred. Pay off that credit card. That credit card's 18% interest right now. Go pay that thing off. You're earning 18% interest on what you would have been paying, right? Like boom, okay, now you're like your best asset is you. You're debt free at this point, and then we start building up your supply. We build up your cash savings. That's what I would do. Now, what am I in? What do I invest in? Real estate. In real estate, there's different what's called asset classes. For example, I'm in apartments, I'm in mobile homes, I'm in single family homes, I'm in vacation rentals. In addition to real estate, I'm big in oil and gas in Texas. Now, what should you do? You should do it, you understand all these things, right? Next for me would be, I have a little bit in crypto, but in crypto mining. So not huge chunks, but a solid chunk that's in crypto mining. Business is things that I'm interested in. I built businesses. I like to help people. So I have a good chunk allocated to businesses. A lot of the business ones that I've done has been through funds, big funds. So that way it's through a broad range of businesses. So if one just bellies up and there's nothing you can do about it, you have a range. But again, even in that, you can't even play in those funds. I think it's $250,000 or $500,000 to just get in the fund. You know what I'm saying? So you have to save for a little while. Also, I've done some hard money, short-term lending as well. So anyway, I'd have to think of the rest of them. I'd have to go through kind of the checklist. But the point is, that's some of the things that I've invested in because there's things I understand, there's things I'm willing to lose. I've lost too. I mean, I've freaking been swindled as well. I mean, I've made stupid decisions. I didn't follow my own freaking rules sometimes. So I've made bad decisions. Don't invest with your ego. Walk it through. That's why I want to give you some framework to walk things through so that you can become successful, that you can become financially free. Now, let me also share this. I'm going to go all the way back here. This is why I'm passionate about what I get to do. Is because what I get to do helps people to do these two things all at once. It helps them to maximize their income earning potential so they can make more money, even when they keep their current income. And at the exact same time, what turned me on was I could build an asset at the same time. So in other words, when I was 25, the idea that I could work for a number of years of my life and build a cash flowing asset with repeat purchases from customers, a cash flowing asset, and I could make more money than I was making. Like I could almost do those two all at once was really powerful. And that formula, using that business model, is what has helped me to become financially independent, financially free, travel the world, and hopefully add value to people like you. All right, if you guys got some value, make sure you put value in the comments. Make sure you share this with your teens or tag friends of yours or tag kids, that you think would need to hear some of this stuff. And then if I can serve you or if I can help you, let me know and I'll happy to add more value to you. All right, guys, thanks so much. Talk soon.